So in this video, guys, I'm going to show you why the AMT framework fails by itself and why you should use AMT layered in with other frameworks such as Elliott wave theory, Fibonacci ratios, Fibonacci time. You should be using market structure. You should be using additional principles such as VWAPs. You should also understand order flow. And another framework is harmonics and patterns, right? And so in this video, I'm going to show you why AMT alone is good, but I could show you why you could be great. And so let's go ahead and get into what we have with BTC and what Orochi is actually looking at right now as BTC chops and ranges in this entire environment. And we'll start off again, as always, as using our fixed range volume profile. So we're pulling a larger, higher time frame 10-week value area, right? So if we have a 10-week value area, we carry these over, we can totally see exactly where we've rejected from the value area once, twice, three times, accepted, rejected, accepted back in, accepted out, failed to imbalance, and et cetera, right? So this is exactly where our current balance lives. And we take it a step out and we look at the daily, right? So when we kind of carry this over and we say, well, where's the 24-week value live? Well, we're simply just taking the fixed range volume profile in this entire range and we're seeing where's the value area high, the value area low, and the POC. You line up the 10-week with the 24-week and you have a combination of the POCs aligning together and the value areas aligning together. So we already know in this instance, this zone right here, 61,000, is a very high confluence zone, but that doesn't tell you how it's going to get there or when it can get there and if it can get there. And when you get there, is there any other confluence that you can start to stack on, such as levels, MPOCs? So you have your 3 time frame skeleton, your monthlies, your dailies, your weeklies, and then you have your NPOCs from earlier footprints that you might not be capturing. So you know exactly where the good A+ setups are. Then you have your Fibonacci's and your VWAPs, okay? Now, that's all AMT framework layered with other auctions, with other levels, NPOCs, other kind of frameworks, right? Now, let's take it a step further and say, well, let's zoom out and look at where our major historical values are. Well, our major historical value is the 2024 weekly value, right? So this is almost 254 days of value in this zone, right? And we can see exactly how well this has carried over, where it's been respected, bounced, rejected, etc., and where it's now chopping again in price. So we have reference on the 2024 value area. We also understand our Elliott wave structure, right? If we've had a 5-wave structure, 1, 2, 3, 4, 5 down, a WXY, and then now we're starting our wave 1, we understand that locally we have some really respectable patterns. So let's get into a little bit of Elliott wave and how it plays up with AMT, right? So if we look and we say we've had a 5-wave structure down, 1, 2, 3, 4, 5, we've completed a wave 1, we're looking for the wave 2, right? And if that's the case, we can simply say, well, this is a correctional environment. We can see that the balance is starting to build out. So now you have 2 frameworks in one that complement each other. You understand that you have a 5-wave structure here. You've started to build out balance, but this isn't a 5-wave structure, rather a 3-legged structure, right? So you start to build out the hypothesis of where the structure is. And you could say, well, we're likely working on an ABC structure because this doesn't have a sub-wave structure yet. This isn't impulsive. If this is a wave 1, 2, where's the impulsivity in 3? It's not here. Just as 3 was impulsive here, that's what we should be seeing here, but we're not. So we're likely still in a structure. And where you could say with Elliott wave is, well, we have the value area low at 61K. Is that feasible to get there? It certainly looks like it right now. But how and when are we going to arrive at that price? And this is where you start to do damage with something like this, right? You know that you have your 3-wave structure in your ABC pattern. You have a WXY, a WXY. Now we're working on the Y, which can come down below the W wave, okay? But how are we actually going to get there, right? Well, we start to look at a few things like harmonics. We're definitely below our VWAPs because we've already considered the VWAP, swing low, swing high. We've rejected at the 82K swing high VWAP. So we're below that institutional mean. We're now below these 2 institutional means from the swing high and the swing low. Very simple. So let's get away from VWAPs because we've already applied that and we know exactly that the trend is bearish, right? We're still putting in a lower low, lower high, 5-wave structure, still a lower low. Local trend is lower lows, lower highs, lower lows, right? So in this case, we have to say, how can price get to the value area low? Because in auction market theory, that states that the highest probability after losing the point of control is next major value, and that is the value area low, okay? So let's go ahead and start marking this out, right? And we're going to take our good friend, the 2024 week POC, and the 2024 value area low, right? So this is exactly where we are at in this cycle, in our higher time frame, lower time frame, medium time frame. So we're going to use this 2024 value area, historical value, as a reference point. And when you start to combine all of this together, you say this is probably a valid place that we can either pivot. Option number one, better option number two. Value levels, right? We have a weekly, a monthly, and a daily down here. We also have an NPOC, right? Weekly NPOC and a few daily NPOCs plus a previous month POC. All of a sudden, what we've done now, guys, from the start of this video, we only had auction market theory. We then layered in Elliott wave theory on how we can get there. We are now going to layer in when we can get there, okay? And that's very simple with harmonics. So let's go back to what we have right now, okay? We know that we're in a likely ABC structure. We're moving in threes, right? This is your 3, 1, 2, 3, 1, 2, looking for the third wave down. But how far is this leg actually going to take us? This is where you need to be as a trader, challenging yourself not to use one framework, two frameworks, but three frameworks, right? We're going to look and project that we've had a very nice trend leg up, right? So if this is the X to the A leg, we're looking at the W wave here, right? And where are we at of the W wave? Well, we can simply take a Fibonacci tool retracement and say, how far do we retrace from this move to this move? Well, we've now rejected and accepted at the 0.5, right? So let's only look at the 0.5 in this scenario. The 0.5 is essentially at the point of control, a little bit below, right? Now, in this scenario, we have now had an X wave. Let's go back to our harmonic cipher here in a second. But we're going to do one more thing. We've already had a completion of this leg. Now we have this leg, and this is completed and rejected at the value area high. So we have some good context here. So we say from this high to this low, where is the golden pocket? The golden pocket has been tapped from this trend. Now you have a good Fibonacci ratio and an understanding of directional bias in your auction so far, okay? But what does that mean? Well, do we have a Gartley or a bat pattern paying out? So we have an X wave to an A leg to a B wave at the 0.5. Now we come up to where we rejected. So we're just measuring each leg and each ratio to the X wave. Now, where can this harmonic start to play out? Well, we already know that we have a value here and we have a major value here. And all of our value lives right down here. So now we're saying where we're at, but how can we get there and when? Well, we can start to hypothesize that we can get there through our historical and proven, consumer psychology and behavior patterns such as harmonics, crowd psychology. But the question still remains, how can we get there and where is a valid place to look at? Well, instead of using retracements, we look at the trend-based Fibonacci extension. So we measure the wave A, B to C leg, okay? So this is the 1.2 to the 1.4 that lines up at the 2024 value area. So as you see how I'm doing this, I'm applying framework after framework after framework, not just auction market theory. I have harmonics, I have Elliott wave, I have AMT, I have NPOCs. I'm using the full topology of AMT, Elliott wave, and I'm now applying a third framework with harmonics, okay? But this still doesn't tell me how and when I can get there. So we're going to use a trend-based fib time, right? And this is based on, again, the height of the A leg, the low of the B leg, and the height of the C leg. Now, this is measuring the same thing as your Fibonacci retracement and extensions, but in a time, because time also moves in time with crowd psychology, with your extensions and your fib retracements. Just as a retracement measures the height of that move, this measures the time that it can take to that move. And typically we like to look at the golden pocket, 618, and then we have the 1-to-1 extension from the 618 to the 1, right? So we've measured this out. So now I can say, well, within my auction, I'm below the POC. I have option number 1 that I could come here, but I have a lot of confluence down at this zone. I have the 618 and the 1-to extension. So now you're giving yourself a time window of when this move is likely to occur. And this puts us at anywhere to next Sunday to next Friday on how long it will take for this move to come down and complete if this is a valid harmonic inside a valid ABC correctional, right? This is just one plan. We have different scenarios that we're tracking, but I'm walking you through this one. This is the highest probability at this point. If this doesn't work out, we have option B, option C, option 3 that I'm not going to walk through, but we already are prepared for what comes next. So as you guys can see, this level here is exactly where I want to be looking for, 59,000. You start to apply everything top to bottom. You have your levels your MPOC? Where's your VWAPs, right? Where's your fibs? Well, we have option number 1, golden pocket from this low to this high. But option number 2 is where I would size up heavier, right? If we have a 10-week value area sitting right here in this zone, this is a better play because you have a lot more confluence here, all right? And when you start to look at something like this, you simply say, I'm just gonna wait for price to come down here. If this is a valid bat harmonic, we target the A leg and we have our stops below the low. Simple invalidation, 1 to 3 setup waiting for us. But obviously we can take it higher and look to target higher at the MPOC above, or in this imbalance higher and higher and higher, because we have a larger 24-week POC and value area high up here if we have acceptance into there. So now all of a sudden you have your directional bias, Elliott wave, how we can get there. You have auction market theory, where we are. You have your harmonics, added confluence, fib ratios, measurements of extensions and waves. It's very calculated. And then you have obviously your order flow confirmation when you get there. So we're now taking AMT to the next level. We're not just looking at it at an AMT lens. We're looking at it from an Elliott wave lens. We're looking at it from a harmonic, right? This is your PRZ. You're using Fibonacci ratios, extensions, and time base. You're now using NPOX, the full topology of auction market theory. You're accessing low value nodes, prehistoric values, and then you're referencing your 3 time frame skeleton. You have your monthlies, your dailies, your weeklies, and then you're using VWAP support. Now, instead of just having a one framed mindset, you're applying layer to layer to layer. And all this is telling you is where, how, and when can price get to this level? And where is the most highest probable setup in this entire chart setup? Well, everything, all of these frameworks agree that this is likely the best candidate and the highest probability. Now, obviously, we're traders. We trade in probabilities. So if this doesn't come down to here, that's fine. We look for the next trade. We go for option B. We look at option C. We already have plans for all of those. So I hope you guys enjoyed this video. And you see that at Orochi, we don't just trade with auction market theory. We layer in with different frameworks, different lenses to give us the highest probable edge.